All right, welcome back to the channel. If you're not in the Bow Valley, winter's definitely settled in here. Today we're going to talk about November and the Canmore real estate market and what that means heading into 2026. Obviously, we've had a lot of conversation about a buyer's market lately, so I think we want to fine tune on what that actually really means. But let's dive into these statistics first. Do you want to talk about the different sectors, maybe Canmore first?
Sure. So in the month of November, there were 40 sales in Canmore. The average sale price was 1.148 and change. The average square foot price was $794. And the average days on the market is creeping up, and it's 71.
It is. Deadman's Flats, Harvey Heights, Lac des Arcs, and Exshaw, we saw no sales for November. Banff, there was one. That property sold for $935,000. The average square foot price was $594 a foot, and it took an average of 17 days to sell. So not a whole lot of activity in the entirety of the Bow Valley. But let's dive into Canmore specifically. Let's talk about single-family homes. So we saw 5 sales. The average sale price was just over $2.2 million. The average square foot price $687 a foot, and it took an average of 156 days. Currently, we're seeing about 31 active single-family homes as we move into December.
In the townhomes, there was 22 active properties at the end of the month of November. 10 sales, 1.239 million and change, $735 a square foot, and 70 days on the market.
Apartment sector, we saw 11 sales. The average sale price was just over $770,000. The average square foot price was $706 a foot, and it took 71 days on average to sell. Currently moving into December, we have 44 active apartments.
Half duplexes, 2 sales, close to 1.6 million was the average sale price. The average square foot price was $708 a square foot and 109 days. There are currently 9 active inventory in the half duplex market going into the month of December.
Let's move into the short-term rental sector here and talk about the hotel condos and the tourist homes. For hotel condos, we saw 11 sales. We'll touch on that later on in the video. That was a little high. The average sale price was just under $900,000. The average square foot price, $972, and it took 29 days to sell those hotel condos on average. Inventory, we currently have 11. You want to touch on tourist home?
Tourist home, 1 sale in the month of November, $955,000, $1,098 per square foot, and average 1 day in the market. There are currently 2 active listings as of December 1st.
All right, let's dive into some year-to-date and some active inventory. I think this time of the year, these numbers tell us a lot because obviously year-to-date we're looking at January to November, so we do have a lot of data to talk about here. Why don't you touch on sold listings, and we can obviously break this stuff down after, but it's important to go over these.
So sold listings year to date, 2024, we had 446. In 2025, we had 402. So that's down 10%. And again, that we'll get into that transitioning to the buyer's market and kind of what that looks like for the Bow Valley.
Totally. End of month active inventory, 134 in 2024 and 132 in 2025. So we're basically bang on there. And if you've been following along with the videos, our viewers are going to understand that we did see a higher, influxation of inventory.
Yeah.
And that's since kind of changed a little bit. Like 40 sales for November in Canmore is pretty good.
Yeah.
So we'll get into that conversation, but let's just quickly go over the average sale price year to date because this is what everyone is curious about.
So the average sale price in 2024 was 1,186 and change, and in 2025 was 1,259 and change. So still year to date up 6%.
Yep.
But we have dropped. We had a drastic drop at the start of the year, and then we've kind of been you and I talking, 2%, 2.5%, 2% in the last few months. So still up 6%, but maybe we can get into some of the reasoning of what we're seeing and what we're thinking and go from there.
Well, I think the most important thing to talk about first is going to be why it feels like a buyer's market. And obviously we've been using that term frequently. and what's actually really happening, and what the numbers are if you were to look at them today and look at November as a snapshot. Let's give people an idea of what the numbers mean today, and maybe not compare a little bit less on how it's been trending, although I do think that that's an important conversation on its own. But let's talk about what these numbers are meaning today. Obviously the market has softened a little bit over the last couple of months. There's no question about that. We've seen that. And I think and maybe we're a little bit guilty of this too, is when a shift happens so quickly, emotionally, you feel that it's changing drastically, right? You tend to maybe overreact a little bit than what the numbers are telling you. And we're not saying that buyer's market is an overreaction.
No.
But let's talk about what November means, because we're clearly seeing a little bit more of a balanced market when we just look at those numbers.
Agree. And I think the public understands seller's market, buyer's market, kind of balanced market, or shift. You don't see the market stay inside the balanced for too long.
Yeah.
It's like the stock market or investments. They tend to have swings, then they go down, and then swings, and then they go down. That's typically what's happened. So that's why people relate to, hey, this is a buyer's market.
Yeah.
Hey, this is a seller's market. But we've talked in videos before. A buyer's market in Canmore is very different than a buyer's market somewhere else, because you don't see properties here that are bargains.
No.
You just really don't.
No.
So, talk about maybe what November looked like, Parks.
Yeah.
In that sense.
Yeah, I think if somebody was looking at the data for November, they're going to look at it and go, this is a very balanced market. This is a healthy market. Maybe why people are feeling that it's changed is because it hasn't been this way in Canmore for a long time. But some of those key indicators, prices, we're still up 6% year to date.
Yeah.
That's a pretty reasonable number. We always have kind of said between that 6 and 10% always seem to be the average.
Over the long period.
Inventory is steady.
Yeah, it's steady.
And
we had a growth, right?
We did, which was due, right?
Yeah.
We were asking for that, and it came. But we're not seeing that level of inventory levels that scream that we have desperate sellers and people are trying to get out of the market. So when you still have minimal inventory, again, we've talked about deals in Canmore and how that doesn't necessarily exist, but you're definitely not going to get that when the competition of what's on the market.
Yeah.
Yes, we are seeing more inventory, which is great for buyers, and they're ultimately just getting a little bit more time, but the prices here, they're flattening.
Yeah,
they're not
dropped.
dropping.
No, they've flattened out.
Now, I think this is an important conversation, and we can get into this a little bit later in full as well, but with prices dropping, we've seen our average sold to ask ratio come down a little bit as opposed to the 99%, the 100%. And that doesn't mean properties are selling less than what the market value is. It's just that market value is a real thing again.
True.
And we're not seeing what we saw before. So that 97%, what that is on average people aren't getting behind the correction quite yet. And the correction doesn't mean a price drop. Again.
And that's a seller thing.
That's a seller thing.
Right? Yeah. That's not necessarily a buyer thing. Because a lot of times when you see 97%, you think, I got 3%.
3% off of what it's
cheaper.
Listed for.
But no, typically what we see is that in a shift in market is where a seller is still chasing that.
100%.
Right? So we see price drops coming all the time nowadays, and they're not price drops where the last one sold here, it gets listed down here, and then there's a price drop. We're still seeing sellers chase that a bit. So that's where that 3% is coming quite a bit.
And I think just to kind of tie this segment off, that's a great point. But I do think that why we can justify being in a balanced market right now is because sellers don't have control of the market.
Yep.
Right? You can't list your property for more than market value.
Mm-hmm.
And even if you are at market value, sometimes that property is going to sit a little bit.
Yeah.
Part of that is time of
Well,
the year.
hence the 71 days on the
Hence the
market.
71 days, and we'll get into that a
Because
little
that's
bit.
completely sold data.
That's completely sold data.
Yeah.
That has nothing to
That's
do
not
with
the
active
market,
inventory.
so
Which, what that tells me is that things are, yes, taking longer to sell, but also things that were on the market for a long time are finally realizing that I can't chase this market. They're getting to a price point that makes sense for buyers.
Yeah.
Because, I mean, you look at the single family homes, the average days on the market was 150 some days, right? So they were chasing. It now got corrected. And part of that is seasonal too, don't get me wrong, but these numbers are way different than we've seen in the past. So, and buyers don't have full leverage right now either. There's not deals going on.
Nope.
Sellers are in no panic to sell, right? So to me, that's like, okay, we're balanced. Like, buyers don't have control. Do they have control of their timing? Yes. Do they have control of fair market value? Yes. But at the end of the day, they're not getting deals. They're not going into a property and being like, hey, sweet, this guy's fire sale. I'm going to get it for $100,000 less than market value. Whoa, whoa, whoa. No, that's not happening.
hence why you got a balanced market.
Hence why you have a balanced
And
market.
if buyers have any leverage, the leverage is that they can be patient,
Yes.
right?
Yes.
Hence why you see longer days on the market and things happening, because they don't have to be in multiples. They don't have to, they can wait not for the market to correct. And I think if you're getting educated properly,
Yes.
you are talking to somebody that's talking about things that are going on in the market as far as a buyer's balanced market goes, so that you're not being told necessarily, hey, wait, because there's going to be a better deal, the market's crashing.
Yeah.
Because anybody that's telling you that, I'd be wary. You know, there's some indicators. We met with somebody, and we'll talk about this next, but interest rates. So, I mean, maybe we'll just lead right into that with this.
We're going to touch on buyers and sellers. So let's talk about interest rates.
Yeah, so I mean, we met with a market specialist today, a market financial person from TD today, and you know, she thinks that we're going to see continued drops throughout this next year. Now, nobody holds a crystal ball, and we're not guaranteeing that's going to happen. So that tends to lead into what's going on here. If interest rates were going to creep up, we probably would end up more into the buyer's market.
Yeah.
Right?
But there's a possibility of that for sure.
Yes.
Statistically.
And buyers become more wary. But as interest rates fall a little bit and stay steady for longer, buyers become more confident, which in turn will keep that into the balanced market. It won't push it into a complete buyer's market.
Yes.
Because there's always motivation to sell for somebody. That could be they have to. It could be they want to move up. It could be they're moving out of the valley. Whatever those indicators are, that can determine where the market goes as well. So there's different key factors.
Yeah. And I think that with the interest rate shift, let's call it, that is being forecasted for 2026. I think, and this is this is just an opinion of mine, of course, no crystal ball, but the hardest thing is we've seen this. Obviously, COVID, completely different. Interest rates hit the floor. That's not going to happen, I don't think.
Yeah.
But when interest rates become more competitive, the people who are buying in Canmore, yes, there's the first-time home buyer that does want to find a place in Canmore, which, you know, is a difficult thing to do. Everyone's aware of that.
Yeah.
But these people who are buying these second homes, or maybe it's a primary residence and they're, you know, looking for a house or something that's maybe a little bit more expensive, or the short-term rental investor, those interest rates make a big difference, because not that there's a whole lot of change in, you know, 0.5% or 1%, but these people who are buying these properties are usually seasoned homeowners, right? They have some money. So that interest rate thing is really appealing to them, because they're essentially getting closer to free money from the bank, right? So I just see the market not necessarily going back to what it was, because I don't think that that's going to happen. But the whole buyer's market conversation, I think I could see that shifting a little bit if interest rates do what they're maybe being talked about doing.
Yeah.
I just think that the demand is just going to come back, and in the spring, everyone's going to be doing spring things.
Right.
So it'll be interesting to see where it goes. I think we're going to remain balanced over the rest of the winter, and then I think, the spring is going to be
it could be busy.
be interesting, right?
Well, and interest rates do two things, right? They obviously allow your payment to be less, not necessarily to give you more buying. Yes, give you more buying power, but educated people have a budget and they work around that. What interest rates do when they drop or stay is confidence. It's confidence in the market, and it allows people to be confident in coming in and going, hey, that's why I think we could be moving into the balanced moving forward again, and climbing and being steady growth, because confidence in the market.
Totally.
And I see that long term, in the next 3 to 5 years, confidence in the market. So
Now, I know we've talked about what this means for buyers and what it means for sellers and investors just briefly, but let's dive into this, and I'm just going to hammer this out, and then we can maybe talk about this a little bit.
Sure.
So for buyers, what are we seeing this means? More choice on the market, more time to make decisions, more negotiating room on properties that maybe aren't priced fair market value.
Over the fair market.
Let's make that very
Stuff
clear
that
right now.
sat for longer.
Agreed.
Yes.
There's some negotiating room.
Yes.
There's no question. That doesn't mean deal, but negotiating room. Stable pricing.
Yeah.
Kind of just tied into that. And then this is obviously kind of the cleanest, and I don't want to say the calmest, because I think that there's still a lot of mentality out there when buyers are looking from, let's just say they're in Toronto or they're in Calgary, because the market's changing there in a little bit of a different way, right? So I think people are obviously, affected by what they're seeing where they're from, affected with what they're seeing in the media. So I don't want to say that it's the calmest market, because I think there is a little level of concern, and maybe concern's not the right word, but change going on.
Yeah.
Right? So they're a little bit
different
more
from
hesitant.
the last 5 years, right? I mean,
It is.
It's changing.
But the calmest in the sense of they're getting more time, they're getting more clarity, they're getting more education, and they're just feeling more comfortable.
Yeah.
So if you're a buyer that's been looking for this opportunity, here it is.
Yeah.
We're not saying that now's the best time to buy that we've ever seen.
No.
But what we're seeing is you get that comfortability by looking at buying into this market right now, because if things change with interest rates and all of that, and we've seen it year over year in the spring, it's just going to get busy again.
Yep.
And maybe the timing is, for these people, is waiting till the spring, till they start to see the shift change, and then go, okay, I'm going to get on board now, right? Maybe they want to be a little bit more patient, and that's one of the abilities that buyers have in the market right now is patience. Why don't you quickly rattle off what it's meaning for sellers, kind of what we're thinking? I don't think we need to touch on the buyer aspect any more than that. I think it's very clear on if they are a buyer, where they're at.
Yeah. So this time of the year is sometimes difficult to talk about with market shifts, because especially in the Valley, it is December.
Yeah.
It quiets down. Yeah. The market gets a little bit slower, but we haven't seen it go quiet because of December and quiet because of the market. So we do see a little bit of a lull, hence the numbers of what's going on. Well-priced homes tend to sit during the holidays.
Yeah, that can happen.
That can happen. I mean, December people kind of shut down a little bit into January. If your listing isn't moving right now, you're not alone. Seasonal. It's not a value issue. Now, coming into the new year,
it can be a value issue.
I mean.
Right? Let's make that clear.
And if we were to talk about active inventory, 158 days on the market for sold active inventory for a single family, that drove that number up because of things that were sitting on the market. So,
and I do think that if we just quickly dive into the detached market, 5 sales, 158 average days on the market, price per square foot still strong.
yeah.
But if I own a single family home, I'm not moving over Christmas.
No.
I'm not. I might
Unless
have
you
my
have
place
to.
up for sale, and I'll, if someone wants to give me what I'm asking for, fair market value,
Sure.
I'll take possession of that in March.
Yep.
No problem.
Totally.
Right? So that's why that number's being driven up a little bit, and we're seeing the townhouses, the apartments, some of those other sectors that might be not that people move in those sectors over the holidays, but just more inventory,
Yeah.
more of those things.
More things
they're,
going on.
They're selling a little bit quicker.
Yeah.
So that's my opinion of the whole days on the market thing.
Pricing is huge, though.
Pricing?
Still for sellers, and one thing about pricing, it's pricing, but it's also presentation.
100%.
So if you want to stand out in a market like today, you want to make sure the details are there, because all of the properties, you're now fighting a little bit more than you used to. So making sure that it's clean, for one, it's painted, maybe it's staged. We met with a staging company last week and really started to understand where that value could help.
Yeah.
Allowing you to maybe price a little on the top end of the seller's market, right, of what's out there. So presentation's huge.
And just to quickly tie into that, and I love this. I love that the market's changing to this.
Yeah.
I think it's good. I think it's a really, really positive thing for everyone.
Yeah.
I really do love it. And it goes back to, if you're in the market as a consumer for anything, whether it's clothing, whether it's whatever it is, like, now people want to do research. People want to know.
Yeah.
People are buying things from companies or individuals or something who have a brand, who have a presence, who carry themselves a certain way, who have that relationship, right? Like, to me, like that, I love doing that as a consumer of anything.
Totally.
So I think it's really good for real estate that becomes important again, and not for,
We haven't been able to do that for the last 5 years.
it's very difficult,
Yeah.
right? Everyone, it doesn't really matter because you could sell what you could sell and everything. But now that there's true value into what people are offering in whatever field that they're doing, it's very, very important. So
Like maybe, just one thing I just thought of off the top, a pre-home inspection. Finding out, hey, what little details, because most people do a home inspection. What little details might come up in a home inspection? Can I deal with those now?
Yeah.
Or can I provide that for the actual buyer? So
quick comment on that. We had a client who just bought a property. We went and did we went in and did our inspection with the client. The seller had brought in a plumber, all these types of things, had the furnace serviced, all of that. There was nothing wrong with the inspection, obviously, but my buyers went into that. There were other comparable properties that were out there. Yes, they had an offer on the table, all of these sorts of things, but they went in and saw that and they said, wow, the seller of this property, and the seller was renting this property for context, the seller of this property really takes care of their home, and people find comfort in that.
Yes.
I would find comfort in that if I'm buying a house and somebody was like, hey, we did all this stuff for you.
Yeah.
The inspection's been done. Everything in the furnace has been fully serviced. I'm like, oh my gosh, like.
yeah, that doesn't mean something's not going to happen, but
Totally.
it's peace of mind.
Yeah.
And it's all the things that we talk about in real estate that are fun. And people enjoy. I mean, and really, it's missing in our world, if you want to be honest.
Yeah.
Communication, respect, all of these things that tie into your home when you're selling it.
Yeah.
It can it can mean a huge difference from a seller's perspective.
Exactly. Let's talk about quickly what it means for investors.
Perfect.
I don't think we need to tie too much into this because obviously they're tied into the buyer category a little bit. But obviously short-term rentals are continuing to perform well from a rental perspective.
Yeah.
Tourism, we've been getting some questions about, do we see this market becoming a little bit oversaturated? What's that going to look like? Obviously, there's lots of new inventory that are coming to the market.
Yeah.
But if you've noticed throughout the world almost, and throughout different news platforms, and obviously Alberta as a province and Canada as a country, the Bow Valley gets talked about a lot. Alberta wants to spend a lot of money
In tourism, yeah.
in tourism in our town. The town has a lot of plans to create sustainability, do these infrastructure and accommodate these things. And the tourism numbers, statistically, we're seeing all of these things grow year over year.
Yeah.
So I don't foresee that market getting too saturated at this given time. And I don't know if it ever will. That's just my opinion. I mean, we got new Nordic spas popping up. We got all these different things that everyone else is doing. It's not like nothing's changing and we're just pumping these things out.
Right.
Everything else is kind of starting to accommodate it alongside of it. Obviously, the town is very proactive in what they're doing. Three Sisters, all of that. And then obviously the hotel data, the hotel condo data, we saw 11 sales there. 4 of those sales were pre-construction. So,
and that's where the oversaturation conversation comes from.
yeah.
Right? People naturally see all these construction buildings going up and go, how are we going to support this?
Yeah.
What is that?
Holy,
People
the town's going to be a gong show.
This is going to be what I hope is that the town of Canmore, the MD of Bighorn, is talking about infrastructure, talking about not just, hey, we've got all these things popping up. How are we going to service them? Whether it's, Three Sisters, the Gateway, that new project with, all the stuff that's going on up there to alleviate downtown pressure. So if those things happen, I agree, saturation isn't an issue. But if they don't, it very well could be long term. And again, we don't have a crystal ball to know what that looks like. I think there's still really good opportunity depending on, and we had this conversation this morning in a meeting with who we met with, asking, do we want to be in Spring Creek?
Yeah.
From an investment
What do you want to
perspective.
spend? What's your goal?
Yeah, I think your expectations have a huge bearing and what type of asset you're looking for long term. So, it just depends a lot on who you are and what you are from an investor's perspective. But I still think there's, the market with Canada and Alberta wanting to grow tourism is still going to be strong in 2026.
Yeah. I mean, I think just to tie this all together, overall, we're in a balanced market right now.
Yeah.
Based on what's happened in the last couple of months, if we want to take that into consideration, which I think we need to do, we are maybe leaning a little bit more towards the buyer's market in a very Canmore way.
Yeah.
It's important for people to understand what that means. And then obviously with the conversations with interest rates and it being December, I could also see this maybe shifting a little bit more that way. And then, that's kind of it. I don't see it fully transitioning into a buyer's market, is just my honest opinion. Those are my thoughts. That's kind of where I'm at. And I think this is it's more healthier and grounded as an environment as a whole than what we've seen in the past.
For sure.
It's so funny because everybody's always like, the market's tanking, everything is changing. And in some areas, it is.
Yeah.
Don't get me wrong.
It can feel that way for sure.
What we've seen is a crazy growth number.
Yeah.
And that's just finally correcting itself.
It's not sustainable.
No, it's not.
No.
So
one thing I wanted to add too is we've always said that we will provide any form of data that anybody is needing. Most of our clients or people that are in our database are getting a snapshot of this via email. If you're watching this and you're not part of our database or you just want this information, just shoot us an email.
Yeah.
Parker@canmoreareliving.ca .com or Kevin@canmoreareliving.com, and we're happy to send that email to you that gives you a little bit more data inside of what's going on outside
and
of this video.
it's a quicker way to get our opinions and perspective of what's happening in the market. Obviously, part of that is personal and part of that is data driven.
Totally.
But yeah, there's never any pressure.
No.
We're just strictly based on clarity, support, honesty, and trying to just educate our clients.
Yeah.
That's what we really focus on. And then obviously, with it being December and the holiday season, our next video is going to be super cool because it'll be a year in review.
Yeah.
And we always love doing those just because there's so much data, and we're kind of nerds that way. So obviously we wish everyone to have a happy holidays and a ton of success moving into 2026. And hopefully if they're around the mountains, they get to spend some time here because it's a special place. But
Yeah.
as long as people are able to get together with their families and do those sorts of things, we value that. So we hope people can enjoy that too. So,
Totally.
right on. Well, we look forward to connecting with you guys via a market update in 2026, and we will talk to you then.